Hello everyone and welcome to this analysis and this crucially important trading lesson I'm about to share with you. This is something I can promise you guys you absolutely don't want to miss. It's going to be extremely helpful to you. So let's go ahead and do it. So as you can see, where I've drawn this arrow at the top comes along the point where we touched on this 100 moving average last May. Okay, so not the one that's just gone, the one before. And after that, you've seen a crumbling, an absolute crunching in price. We come from 142429 to 116, roughly. That's an enormous fall, 2,600 pips or so. It's a very, very long way to come down. Now, the question comes, I thought this was just so important because so many people, they use indicators like the stochastic oscillator or the RSI, relative strength index, anything that's measured with averages and gives an oscillation or a reading like this to tell you if something's oversold or overbought, must be taken carefully. It must be used the right way. Now, the reason why I say that is because this stochastic oscillator bottomed out in November 21. So if you're a trader who sat there and thought, okay, you know what, it's bottomed out, this must be a buy, you will have had a hiding. Because you've come down here, you've come down again here, and you're now way lower down, 1,700 pips or so. It's imploded. So never ever read this and think, okay, it's low, and I should just buy plainly for that reason with no risk management. That doesn't work, guys. That will never work. That does not work. You can't just trade based on one indicator. You need risk management strategies. You need to be able to scale in and scale out. You need to understand price action, everything along with it. So the main takeaway from this, guys, is that you've fallen a long way. And if you're someone who's thinking, okay, well, it was oversold here, so I bought, you would have been annihilated. And it's still oversold here. That does make it long and it does make it cheap. But if you can't handle what would happen if it fell further, you cannot trade. You will not be a long-term trader if you don't understand risk management. Risk management is the fundamental part of trading, okay? And if you don't have it, things aren't going to work very well. Now, obviously, we've got this long candle wick. We're seeing really a test. We may dip under it eventually. This is showing a very bearish candle. So if you're risk averse, leave your longs off for a long way. But what you're really looking for is to catch something where you go like this, 145 to, 159, massive move there. You go 138 to 150, big move. Or you get a smasher like this, 118 to 143. You're looking for something enormous like that. Okay, now you need to be able to use your risk management between then in case this falls lower. And that is it, guys. Don't go off any oversold reading plainly because it will hurt. You don't want to do that. Scale into the market, trade with correct risk management, and it won't matter if the price falls against you. Thanks for watching, guys. See you in the next one.